And I'm the founder of MEM Investment Research. And today we're going to be reviewing how you can play pullbacks, if you will, of these big, powerful, fast-moving stocks. The best way for you to find an entry point when these stocks move in such a fast manner, you don't want to chase them. So we're going to go ahead and review how you can identify entry points in some of these fast-moving stocks. So we'll go ahead and start, provide you with a bit of background as far as who I am. I do have over 25 years of experience in the financial markets. I did start on Wall Street, the trading floor of Goldman Sachs, and it was in their fixed income department. Super, super exciting. And I did go from there to a large asset management firm in New York City, where I was managing over $2 billion in assets, and that was in fixed income as well. It wasn't until I moved out to the West Coast with my then new husband that I got involved in the equity markets. I joined William O'Neill and Company, and there I was vice president. I was there for over 15 years, and I was part of their institutional marketing department. For those of you not familiar, William O'Neill is the founder of Investors Business Daily, and that is a publication that helps people identify these big momentum, fast-moving stocks. So during that period, it was wonderful. I traveled the world. I worked with top portfolio managers, advising them on the markets, as well as individual stock selection. But it was during that period that I really, again, learned about these powerful stocks. We were reviewing thousands of charts each and every week, and again advising these portfolio managers on stock selection. And now I do have my own investment research firm. I still review thousands of charts each week, and it's actually a passion of mine, trying to uncover these stocks poised to take off. And as part of my work now, I put out a weekly, actually bi-weekly newsletter that talks about what the markets, where they're headed. We do identify stocks. We have a stock list. It's quite successful newsletter. So that's a bit of information about me. Let's go ahead and move on. Before we begin, there's a disclaimer. We're going to be reviewing a number of examples today. So the primary takeaway from this is that we will not be providing any individual buy or sell recommendations. The examples are just for that purpose. We're going to be using history as a guide for you going forward. So here's what we're going to be covering today. The first item is, how can you spot a powerful stock that's poised to go higher? We're not going to get in depth here. I do have other tutorials that will guide you and get quite a bit more detailed as far as how you can screen for these stocks, but we'll touch on that. And then also describe what is a pullback, exactly what is that, and then give you insights on how you can screen for that. We're going to also, again, within that pullback framework, help determine how you can identify a buy point when these stocks pull back. Using history as a guide, I talked about that, and also to give you confidence, because the biggest part with technical analysis, which is a large part of my work, is the fact that history does repeat itself. That's the power within technical analysis, where if a certain set of characteristics comes to light, there is an expected reaction to that. So we're going to be reviewing some examples to help make some points here. And then also at the very end, there's going to be a special offer. So I urge you to stick around to the end of the presentation. So let's start at the very beginning. I mentioned we would be getting into a little bit into some of the characteristics of what I call a powerful stock. And a powerful stock, just by way of definition, is one that is outpacing the broader markets. And oftentimes it can be by a wide margin. Currently, of course, we're in a very, very strong period of this bull market. So, for instance, within our list of suggested holdings, we have stocks that oftentimes are going up quite a bit more than the broader market. So that's what when I say a powerful stock. And so let's look at some of the characteristics, and this could be ways that would help you screen for these stocks. One is if you see the stock hitting a new one-year high in price. And the reason that would be identifying that stock as being powerful is because the stock is hitting new high ground. It does not have what we call overhead supply. It does not have individuals that may have purchased the stock within the past year. They're waiting for it to hit their purchase price so they can get out. And that would dampen the progress. But if it's hitting a new high, a one-year high in price, that's one sign. The other is the stock has strong earnings and sales. From my work, earnings is going to be your strongest driver for many of these stocks. So you want the stocks in addition to be stocks. And then the third item is if this is in a healthy industry group. Right now we have certain industry groups that are clearly outpacing the broader markets. We've seen a bit of sector rotation over the last 2 months, I would say, or certainly 6 weeks, and you want to be in those stronger groups. Now, there is one other characteristic that I did not list here, and that's because it's a metric that's readily available. It's out there, but strength high. And for those of you not familiar with that metric, it is something that Investors Business Daily would provide you with, that the relative strength of the particular stock that you are looking at. And generally it's going to be versus the broader markets, and the higher the number, of course, the better. So you definitely want a relative strength number that it's at least 80. If it's in the 90s, that's better, and that's telling you that that stock is outperforming either 80 or 90% of the broader market, depending on what that number is. But that is another characteristic of a powerful stock. So each of these items I've mentioned here, again, I do go into more detail with other tutorials, but you can screen for this. These are ways that can help you identify and get in front of these fast moving, more powerful stocks. So as these stocks advance, and they do have these moves in excess of the broader markets, there is going to be a time where these stocks need to pause. They're not going to continuously go up each and every day, each and every week. There will be a period of what we call consolidation. So when these stocks pause, oftentimes they will drop in price. Sometimes it'll be a sideways pause, but this is what I mean when I say a pullback. So when these stocks, after having these massive or big moves, when they pause, it is often an opportunity as an investor for you to get into the stock rather than chasing it to new highs, because at some point in time, it will again pause and go down a bit. So that's the pullback. And then also, what key characteristic defines whether the pullback, sometimes the stock will pause, it will come down a bit in price, but certainly there are going to be times when it's more than just a pullback. The stock has not just paused, the uptrend is over. So you want to be able to differentiate that. And there is one key characteristic and way that you can do that. We're going to get into it. And it is by graphically overlaying onto your price chart an indicator that will tell you. And as we get into that, you will be able to quickly point out to you what overlay you can use that's going to help you define whether, in fact, it is a pullback or is the stock poised to go further down. So let's go ahead and get started. I talked about using examples. The first one here we're looking at is Progress software. We're looking at a daily price chart. And here's what I wanted to point out to you is one of the metrics, and we're going to be seeing this in every example. When I look at daily price charts, oftentimes I will put in moving averages, simple moving averages. And in this case, it's a 10-day and a 50-day. So this, again, we're looking at daily. So each bar here represents 1 day of price activity. And this green line here is the 10-day moving average, and the red is the 50-day moving average. So here's what I wanted to point out with this example. So for instance, here we have a stock that's in an uptrend. It has this 1 day following 4 or actually 5 up days, and it has this 1 super move day. So again, you want to make sure that you're not buying the stock up here. And one way that you can define that the stock is what I call extended or due for a pullback is take a look at how far away when the stock reached this high on this day, look at how the price, how far away it is from that 10-day moving average, and that's what I would call extended. Oftentimes when you see this, it's going to be anywhere from 6 to 10% above that 10-day moving average. So you don't want to chase it. What you want to do is wait for what we call that pullback. So in this instance, the stock is pulling back to that 10-day key moving average. That's where you ideally would want to put your buy point in when it pulls back. So in this case, it did pull back 4% from that peak in price. At this point, the 10-day, at this pullback point, the 10-day was higher than it was certainly back here, of course, but this would be an ideal entry point. Now, I will say, given the current market environment, oftentimes these stocks are not going all the way back to the 10-day before resuming their uptrend. So it's going to be very individual. So I don't know that I would use a pullback to the 10-day as an exact, but ideally you do want to get as close to that 10-day moving average as a buy point. So the stock does continue its advance. Let's take a look here. Again, is another explosive move. Oftentimes when you see these moves, it is going to be earnings related. The stock comes out with good numbers. So you can see really quite clearly how extended, when it did get to this peak in price, how extended it was from that 10-day moving average. So that's going to be something that you want to key in on as knowing to help guide you in your buying decisions. You don't want to buy a stock that is super extended and far away from that 10-day moving average. Here in this case, it did pull back quite nicely to that 10-day moving average, giving you that opportunity to get into the stock rather than chase it. So here's another example. We're looking at a weekly price chart in this case. And so as we move on to a different time period, we're going to use different moving averages as our guide. So for the weekly, we're going to use a 10-week and a 40-week, which translates into a 50-day and a 200-day. So let's take a look. This is ALRM, another fast-moving stock. And what I wanted to point out to you here are these various time periods, and you can again see visually how the price gets very extended. Now, it's not as clear to see on this chart, so I did point it out to you here. At this point in time, this peak in price, the stock was 6.5% above that 50-day, that red line, or 10-week moving average. So you don't want to chase it. You want to wait for the stock to come in and pull back to that 50-day. That's going to be your buy point. So as we move on, the stock has another, in this case, a 4-week uptrend. You again don't want to chase it, but you want to wait for that pullback to the 50-day moving average. And in this case, it was a 12.5%. The price was 12.5% above that 50-day moving average. So either you can eyeball it, or there are charting services that will provide you with that information as to how far above it is from that key moving average. And then as we move on, this more recent move here, the stock actually got 13% above. So you want to wait for this pullback as an entry point and an ideal time to enter the stock, again, rather than chasing it. So we want to continue on with our examples. So here's another daily price chart. And I did mention to you that not every pullback is going to find support at those key moving averages. And it's important that you know what to look for to tell you that it's more than just a pullback. So we're looking at a daily price chart here. This is EBIX. And what I did want to point out to you was this particular move. This was in fact on earnings. The stock had an explosive response to earnings, but news following that caused the stock to again do more than just pull back. So here's your first key indication that it was more than a pullback. It breaks below, because we're looking at the daily price chart, it's going to be a 10-day. So the price breaks below that 10-day moving average, but take a look at the volume. The volume on that is quite high. Hopefully you can see that visually down here. These are volume bars. So here is the volume. So the stock breaks below that key moving average on volume. That's going to be a clear indicator that it is more than a pullback, because when these stocks pull back, in most cases, the volume dries up. So you're not getting selling pressure on the pullback. It's just that the buying has subsided. So it's pulling back on very, very low volume. So when you see this big volume and a break, that's going to be a signal. And indeed, the stock does go into a go nowhere period for quite some time, for about 6 weeks. So as we move further along, let's take a look at this period here when the stock has another explosive move, because and I do have other tutorials that'll tell you when a stock is resumed its uptrend, but in this case it has, and the stock has a very big move. So in this case, it pulls back to that 10-day moving average, and take a look here how much that volume dries up. So that's going to be a signal that it is simply a pullback. It finds support at this key shorter term moving average. The stock has another explosive move, again another pullback, and again we see the volume drying up. So that's going to tell you that certainly the odds are that it's a pullback more than anything as far as a downtrend forming. So here's another one. We're looking at a daily chart. This is John Bean Technologies. And what I wanted to, I did overlay some indicators on here. And these are technical indicators that can help you and give you even more guidance. So in this case, above the price chart, we have what is the RSI, your relative strength indicator. Again, I have other courses and tutorials that get quite a bit more into this, but for today's purposes, what I wanted to point out to you here was when this stock, we talked about it being more than a pullback. So let's take a look. It breaks down below that 10-day moving average as opposed to finding support. So that's your first sign. But when you are looking at technical overlays, this RSI is a relative strength indicator. So you want to pay attention to the slope. If it's downward trending, that is a negative. And in this case, it is in coinciding with that break. So that's a negative signal. And then down below, I have what's called the MACD. It's a moving average convergence divergence. The black line is your moving average line. The red is the signal. So we're getting what's called a negative crossover. So when you can educate yourself to these technical overlays, you can use them in conjunction with the price action. That's going to be really quite powerful. And in this case, these three indications are telling you that this uptrend very well may be over, and in fact it is. So we are experiencing more than just a pullback. And the stock does go on for a fairly extensive period for that pullback. So let's take a look at when the stock resumes its uptrend. And what I did want to point out here is, again, using these indicators to provide you with guidance that these pullbacks are in fact very much in line. They're pulling back to key moving averages. Your relative strength indicators are quite positive, so you can buy on this pullback. And then likewise your MACD, it's above this net zero, it's trending in a positive fashion. So you're getting other indicators that are telling you that this is merely a pullback and it can be bought. Now sometimes you will see breaks below this key moving average, and we'll get into it in other examples as to how you can know that that pullback below the 10-day is fine. So we'll get into some other examples there. So let's take a look. Here is one example. We're looking at a weekly price chart. This is Momo, and what I wanted to point out here is using, in this case, outside factors. So we talked about using indicators, and in this case, we're going to look at what's going on in this stocks industry group as a guide to telling you that, in fact, it is more than just a pullback. So in this case, what I'd like to point out to you here is this particular period where the stock, it did give the appearance of potentially pulling back, but it breaks below. So we're looking at a weekly price chart. So this red line is a 10-week or a 50-day. This is a 40-week or 200-day. So the stock breaks below the 50-day moving average. And I talked about this before. It did so on huge volume. So that's quite negative. That's giving you a signal that the any kind of uptrend has been reversed. But more importantly, what I wanted to point out to you is that the industry group that this stock is a part of was doing really quite well. This is a Chinese internet stock, and most of the other stocks in this group were doing really quite well. So that tells you that if this stock is breaking down in the face of a very, very strong backdrop, i.e. the group is doing well, that's another reason to believe that it's more than just a pullback. And indeed, the stock did go down. So you want to pay attention to the bigger picture here. So here we're looking at Netflix. It's a daily price chart. And what I wanted to point out to you here is, again, signals that it is more than just a pullback. So we can see Netflix had a huge gap up here. This is on earnings, and you think, okay, I'm not going to chase it. I'm going to wait for that pullback. But what I wanted to point out to you here is on this particular pullback, not only was it a big day as far as percentage decline, also the volume was significant. And on this particular day, it was 55% above its average volume over the last 50 days. So that's huge. That's a signal that you do want to pay attention to. So volume is going to be critical on these pullbacks. If it happens on big volume, you want to pay attention, perhaps give it a little time. And indeed, in this case, it did go on to decline. Now let's take a look here at a more recent move. And in fact, this is, the stock is still consolidating and pulling back. Take a look at the volume here. It's light. So that is very, very encouraging as far as indicating that this could be very much more than, could be just a pullback rather than anything worse. So here we are with another daily price chart. This is Beazer Homes. And again, when a pullback fails, I think it's just as important that you are tuned into that as much as when to buy on the pullback. So what I wanted to point out to you here again is using these overlays in conjunction with this, what could be a pullback, but in fact is not. So as this stock is declining, it's doing so on very big volume, but you're also getting these negative indicators that, again, if you are tuned in and educated in the use of these indicators, you'll know that they're signaling a near-term downtrend. So here we are with moving further down. Beazer did have this stock had a big upward move here. But what I wanted to point out to you, and I did earlier as well, is the importance of staying on top of other stocks that are in the group. And in this case, the entire housing group faltered. And the reason I'm pointing that out to you is because this pullback here, we're looking at a daily, so we have a 10-day. The stock did pull back to its 50-day, to its longer-term uptrend. So this is what you are looking at here. This was an ideal buying opportunity because the fundamentals in this group and for this stock really had not shifted. So you could use this 50-day longer term moving average as your ideal buy point as the stock pulls back in line with the rest of the group. So the group does come back into favor. The stock has a fairly big move, and now we can resume going back to using that 10-day as your buy point rather than chase these moves. So here we're looking at another daily chart, and this is Arista Networks. This is a big high-performing stock, certainly this year. So again, we're looking at when the pullback fails, because again, you want to make sure that you're not getting into a stock that could potentially be going lower. So again, we're keying in on these breaks below this 10-day moving average. We're looking at a daily. Your RSI has turned negative, and then you're having a negative MACD crossover. So it does not bode well. The stock does continue to decline. But now let's take a look after this big upward move, and as the stock again resumes its uptrend. And in this case, you are able, for the most part, to use this 10-day moving average as your buy point. Many stocks have this look here during the beginning of September. It was a rather lackluster period, and so you want to make sure if the stock breaks below this shorter term moving average, take a look around, see what the rest of the market's doing. Are other stocks behaving in this fashion? And that's going to give you confidence to know that it's okay, that it's broken support, that's in line with the broader markets. So here we're looking at another daily price chart, and I did want to point out something. I may have done this sooner, but for those of you that are intraday traders and you look at intraday pricing or charts, for instance, a 15-minute or a 1 hour, this using pullbacks is not going to be effective for intraday trading. And the reason for that is because the moves for that intraday time period are so swift, it's not going to be effective. It does need to be on a daily or a weekly price chart. So again, we're looking at another daily price chart. This is Brooks, BRKS. And in this case, we're looking at again, a 10 and a 50-day moving average. So this green line is your 10, the red is the 50-day moving average, and you can see how this stock will have explosive moves. It will get extended, in this case, 5.5%, 7%, and then 8% above this key 10-day moving average. You want to wait for that pullback rather than chase the stock. So using that as your guide. So here's a weekly price chart. This is Boeing, and again, we're going to use that 10-week or 50-day. That's your red key moving average. And in this case, the stock has had a very, very good year, so to speak, but you can see that it does have periods where it pulls back. After getting quite extended, it pulls back to that 50-day moving average. Again, we're using these key indicators to help guide you, to tell you that it's in a clear-cut uptrend and it's simply pulling back and nothing more. And then here's Boeing. What I did want to point out to you is, in some cases, there is one other key moving average you can use. That's the 5-week or 25-day. So let's go back and look at Boeing, the one as we were just viewing it. I had a 10 and a 50-day. What I wanted to point out to you is this period here where the stock is simply stair-stepping higher, but you're not getting any guidance because of this gap here, and then we experience it again here. And so in these faster moving stocks, you may want to overlay yet another moving average, and that's what I'm doing here. I'm putting what's called a 5-week or a 25-day, and take a look. This is that same period where there was that big gap. Now you are finding a moving average that can act as a guide, your 25-day. See how closely it hugs it. So that's going to be your new guidepost for pullbacks. And you can see it pulls right back to that 25-day. So that's another moving average that you can add to your arsenal in these faster moving stocks. So we've reviewed quite a number of examples. I think we can make some conclusions based on that. Again, you want to make sure that you're not getting into a stock if it's extended. You don't want to chase these stocks because oftentimes you will get shaken out as it pulls back. You do want to use the broader markets, the direction and the activity of stocks in the industry group of the stock you're looking at. That's going to be really quite helpful as a guide to you as far as the action in your stock. Is it behaving counter to the other stocks in that group? So that's a way. And then also, I say this quite a bit, if you're devoted, you can do the screening. If you don't have a lot of time, you want to speed up your learning, I would say subscribe to a newsletter. I know with my work, oftentimes I will identify new stocks that can be bought, but I will advise if you need to wait for a pullback, and it will be, that's a lot of the work that I do as far as identifying stocks and telling you whether they can be bought now or do they need to come in before you enter the stock. So I talked about a special offer. Here we are. I did want to share with you, this is a course that we talked today about how to use moving averages for pullbacks, but there are a lot of other powerful ways that simple moving averages can guide you as far as identifying uptrends, identifying downtrends, identifying groups that are coming into favor. So this is a course that will help you really fine-tune how you can use these powerful indicators. And it's also provides a number of historical examples. This is one indicator that I use very extensively in my work. So this course is going to help you really pinpoint and fine-tune not only, again, individual stock selection, but also broader groups and sectors. You want to be on top of rotation. So this is a course, normally it is $197. If you access, there is a link here and it should be in the chat box. It is today only $9. And I would urge you to take advantage of this offer so that you can really expand your knowledge and educate yourself. This is something that, in this case, there is intraday trading as examples. So this, for this particular course, if you are more of a short-term day trader, as well as for longer-term investors. So it does help. There we go. So I did want to see if we had any questions. Let me see if I can pull this out. So there are a couple of questions. So someone was asking, yes, there is a recording. So you will receive the recording of this today. Someone wanted to know how much, Janky, how much earnings and sales do I use %? Yes, so that's a very good question. And for my work, I do need to see ideally at least 20% improvement quarterly as well as year over year, and then revenues at least 15%. But ideally you do want that number to be higher, but those are the normal metrics. And then also a question, how can you scan for pullbacks? And actually that is a good question. I did mention that I would get into that. So one way that you can scan for these pullbacks is you want to look for screen for stocks that have had, again, it is going to depend on your investment style. If you are more of an investor, you can, at the end of the week, screen for stocks that have had big moves that prior week. And these stocks may be up 5–10%. And when you see this kind of big weekly move, there is an expectation that they will pull back. If you're more of a shorter term, this is a kind of a screen that you can do at the end of every day, where each day you want to see stocks that have had these explosive moves, and you would expect a pullback from that. So that's one way to screen for stocks that could be poised to pull back. And then from there, you want to set up alerts as they pull back to those key moving averages. And when that happens, that is going to be your buy point. So that is a very good question. Neil wanted to know what the subscription service costs. That's a very great question. The service cost, it's $97 a month, but I do have a $7 trial. And for those of you that are interested, you can try it for 4 weeks. There is no obligation beyond that. You simply, if it's not suited to your taste, you just indicate that you no longer wish to receive it. But and that trial offer is something for those that attend it today. I will send an offer to you via email, and certainly if you obtain this course, you'll get immediate access to that trial. The newsletter comes out on Sunday, and then also midweek on Wednesday. There is a very, it's a wonderful update midweek, not only to the broader markets, but also as it relates to each stock, whether they are in buy points or not. And wondering, I don't see any other questions, but for those of you interested, I can be reached at MEM Investment Research if you want to find out more about my work, or if you have any further questions, I can, myself or my team, we're happy to provide further insights. And with that, I thank you again for attending today.